welcome to United Tax Training. My name is Mr. Boyd. I'll be taking you through the 1040. Most of you had an opportunity to key tax returns in. The first tax return example that we're doing is Don Johnson. So we're looking right now at the U.S. 1040 individual income tax return. This is for 2014, however, they are pretty much the same. We have his name, he has his address, and then as we go down, right on the presidential election campaign, you'll see filing statuses. It asks you if you or your spouse want to donate $3 to go to this fund. If you check it, it won't reduce the refund. It won't affect the refund. It'll go. So you can ask them that question, and it's up to them to say yes or no. So with the 5 filing statuses, we have single, married filing joint, married filing separately, head of household, qualifying widower with child. 90% of your clients will be either single or head of household. Single is a person who lives by themselves. They don't have any dependents living in the household with them. Head of household person have an individual who they have provided more than half of the expenses. There's qualifying factor. However, someone who would be living in that with the taxpayer, that would qualify them as head of household. And they don't necessarily have to live in a house because many people have dependents who are off in college. Um, we'll get into that a little later as we go through dependents. So those are our 5 filing statuses. Okay, everyone. In the last section, we went over the filing status. So we have the 1040 individual income tax return, and of course, you navigate to these forms, do the form tree on the left-hand side, main information sheet. So we're at the 1040, and we're doing a detailed look at the 1040. So we went through filing status. We talked about exemptions. Now we're going to take a look at income. This is the income section on the front of the 1040. You have your income here, and right under income adjustments, we'll be going to that shortly. The first income that we have here is income from wages, salaries, and tips, also known as W-2. Here is a W-2. So the client or the taxpayer will give you the W-2, and you're basically going to take this information and you're going to key it in as you have done with the returns that you keyed in. So W-2 is our first form of income. It will pop up here. If this return had a W-2 on it, I'll just go ahead and add one right quick just to show you all. W-2, I typed it in there. There's other types of W-2s, certain gambling winnings, W-2s, that's Guam wages, W-2 PR for Puerto Rico, 4852 substitute W-2 or 1099. I never used any of the other ones, only this particular one here. Okay, now we get to the W-2. Everyone had a chance to fill it out, so I'm not going to go into that. I'm just going to put $12,000 here, and I'm going to hit tab. And of course, when we go back to our 1040 page 1, voila, go back to our 1040 page 1, and here it is, $12,000. Other income, taxable interest, tax exempt interest, ordinary dividends, including qualified dividends from Form 8814. I'm just going to go to our dividend form. Okay, kind of looks like a W-2, however, it's different. You'll see it right here, 1099 dividends and distributions. You're going to do it the same way as a W-2. You're going to key in the employer identification number. Well, the individual information will show up here. Here's the corporate information up here. And you just go to add forms, 1099. They have all the different types of 1099s here. Now with the 1099 dividends, we're not going to add a form. We are just going to put those amounts right here. So let's say if it was $9,000, we'll put $9,000 right there. Hit tab. And that's not income. That is not earned income. So it's not going to show up here in our total income. It's not going to affect the income at all. But that's where that will go. As we go further down, we come to business income, profit or loss. So we have the Schedule C, and we've talked about Schedule C's. These are for people who have do business on a cash basis, or they can have a small to medium sized business. They would do the Schedule C. In this case here, Don Johnson, he has $18,000 in income from a Schedule C. With the Schedule C, people who receive 1099s, miscellaneous, that means you're a subcontractor. You will be receiving a 1099 from United Tax this year. You would attach that to your Schedule C, and that amount will pop up here. So when you add your 1099s, I'll go to the second one, 1099 miscellaneous, and it's going to ask me, would I like to add it to an existing form or add a new form? If I click on add a new form, and then I go down to they give me the option to do an EZ because there's no dependence on the tax return. Okay, what I'm going to do, I'm just going to delete this Schedule C here so you can see the 1099 when I attach it. I'm going to go ahead and add a form. 1099 miscellaneous. So the client comes in. We want to attach this 1099 miscellaneous to a Schedule C. That way we can write off some of that income. So you notice that the Schedule C popped up here. It's blank, and your 1099 popped up as well. So it's normally in the non-employee compensation field. That's where you'll find your figures. Yes, and once I put that there, it auto-populates onto the Schedule C over here. So that's how you add the 1099 and you attach it to a Schedule C. Then from here we can go about adding certain expenses to reduce the amount of income that was reported on the 1099. So we went over W-2 income, we went over dividends, and we went over Schedule C. And there we are on line 12. We have business income or loss. Now, as we go down, I went a little too far. As we go down, we see some other forms of incomes. IRA distribution, taxable amount, pension and annuities. We'll take a look at that one, pension and annuities. I think that's my last one. So that's called a 1099-R. Pension, annuities, retirement, profit sharing plans, IRAs. That will be reported on this form right here. So when we have a 1099-R, we do the same thing, 1099-R. When you do 1099, it'll come up. You don't have to do the R miscellaneous. They'll all pop up. So here we go, the 1099 form. And we'll fill it out exactly the same way as is on their actual form or document. They usually have this online in W-2s, and we can access them that way if the client don't have them. However, it's a 1099. We just go ahead and add a 1099 form onto the tax return, and then we put the amounts in here along with the, of course, the payer ID as well as the payer's name. So that is our income section, and we'll be moving over to the adjustments to income. So I'm going to go back to our 1040, page 1, and I'm going to scroll down. Filing statuses, we talked about that, the dependents there. Income, all the different types of income. And as we pass income, we go to adjustments to income. And what happens is these particular adjustments, they're going to reduce this total income. So we have educator expense, certain business expenses of reservists, qualified performing artists, and fee-based government officials. I never had anything I needed to put there. Well, actually, what happens is when you itemize deductions, you can actually do unreimbursed employee expense, and it will pop up. That's what that 2106 form is. Health savings account, moving expense, half of your self-employment tax. As in this case, you see we have an amount is because we added the Schedule C. So anytime you add a Schedule C, you do have self-employment tax. Half of that will be deducted from your income, so they give you a little break. Alimony paid, RA deductions, student loan interest deduction, tuition and fee deduction, all of that's going to reduce your income to bring you to your adjusted gross income. As we go through, you will know the questions to ask. That's your 1040 page 1. You just have your address, you have your filing status, you have your exemptions. You get a personal exemption, and you get an exemption for your dependents, each one, and that's an amount like about $3,700. As we go down, we see the income section. We talked about 4 types of income: W-2s, dividends, which are 1099 divs. We talked about business income. You don't necessarily have to have a 1099 miscellaneous to do a business Schedule C. It could be someone who just received cash payments or make money, as they say, under the table. You can create a Schedule C for them. However, those who are independent contractors like yourself, you will be receiving a 1099 miscellaneous form, and you'll be reporting that through your Schedule C. We talked about IRA distributions and unemployment compensation. That goes right in here. Social Security benefits, all of that stuff. All types of income goes right there. We talked about adjustments to income, which will bring us to our adjusted gross income. Next, we're going to page 2 of 1040.